So, Brian, a friend of mine, I would say is more of an acquaintance, is shopping for financial advisors and is thinking about going from one from their bank to somebody else because it's convenient. So they might even qualify for free checking as an incentive.
Oh, that's good.
But how is this service from the banks different from yours?
We like the banks, actually. I think the banks are great. I wish there was more bank financial advisors out there, to be perfectly honest with you, because that's where we get a lot of our clients from. There's a big, huge difference in the services that we can offer that they just can't offer. It's not that the actual advisor wouldn't want to if they had the independent status like we did. They just can't. It's kind of like their hands are tied behind their back, right? They're sitting there going, I mean, I know a CPA that is a financial advisor that works for a bank as a financial advisor. He's a CPA. He used to do it in his prior life, right? Okay. But he can't give tax advice. Yeah, isn't that funny?
Wow.
He can't give tax advice. It says on the bottom of the statement. Read your statement if you're at Wells Fargo or even Edward Jones or any of these places, the big banks. You look at the bottom what it says. We do not give any tax advice.
Interesting.
And you're going, wait a second. The guy that's managing my $3 million taxable portfolio that had created a lot of capital gains last year
can't give me advice.
Right. We had a recent client that was shocked and surprised and didn't know why there were all these fees, or not fees, all these taxes they had to pay. And I said, well, I don't know. It could be the investment you're in. I have no idea. Bring your statements and we'll do a second opinion. They've been listening to the radio for a few years and this was the last straw. They've been listening for years, but they're happy with their advisor. And so I looked through them and it was the first meeting. I usually don't even do this, but I'm like, you got a lot of mutual funds. They're like, but I thought mutual funds were good. Dave Ramsey talks about mutual funds. I'm like, I know, but he's talking generally speaking, diversification. He probably doesn't have any mutual funds in his taxable account.
Yeah.
No, he has individual stocks, probably, and individual bonds. Why? Because they're more tax efficient. Because in your tax bracket, they make a lot of money. You shouldn't be buying and selling all the time in a taxable account, right? If your income's nothing, it doesn't matter. But you're paying like 30% in ordinary income, right? Every time these mutual funds are kicked out at the end of the year, it's inefficient. And and so we just pointed out, here's the capital gain. Oh, I didn't sell anything. Why are they giving me a $25,000 capital gain? Because the mutual fund is a corporation. Like if I gave you your owner in my business 25%.
Yeah.
Okay. And you'd have to give me a lot of money for that. But if you did, you're a 25% owner, and at the end of the year, you're gonna go, hey honey, we don't owe any taxes. We're good. I did my tax return on TurboTax. We're good. Oh, by the way, I forgot to send you my K-1 that you're gonna put on your tax return.
Oh yeah.
We had a good year last year, Brett, and you are 25% net profit is coming over to you. You go, well, but you didn't even send me any money. I didn't get any money. You're a shareholder. You have 25% of the earnings on your tax return. It's the same thing. You are part of a corporation. A mutual fund is a corporation. Had no control of when it was going to come, if it was going to come, right? Did you? It just shows up.
Yeah.
And so that is really poor tax planning, because what if you converted an IRA at the end of the year because you wanted to do that? You're double whammied, right? And bumps you to the next tax bracket. So it's just really poor to really, if you don't understand taxes and investments, you really need to have someone that is going to look at the whole picture and be able to give you advice, because to have someone manage your investments and not give you tax advice is a crime. It really is. You should have someone that is integrated to be able to tell you. And there's firms all over the countries that are doing it. We're not the only one that does it. There's firms all over that can have a CPA in-house that will say, you know what, that's a bad idea to do that, and not be afraid of telling you the truth and the honest truth of what's going on. And it doesn't have to be kicked down the street to some guy that doesn't know what's going on in your investment portfolio.
Yeah. And it's just an ignorance. It's just the not knowing. If you need to know, call the Integrity Financial Planning Team. They can help you. They'll make you understand. 866-2-PLAN-4, 866-TO-PLAN, and the number 4.